Hello, this lesson starts step or part 2 of the conversion to UN system in the conversion manual for 2011.3 customers who are converting to the accounting only system. In the first conversion lesson, well, you should have already completed the new client training course, which is a 2-day course, then gone through the part 1 of the conversion lesson. Part 2, we start off with step number 4. So step numbers 1 through 3, as we've noted before, it's important that 1 through 3 are completed before an on-site visit with the visiting clerk. So 1 through 3 essentially included picking your conversion methods and then gathering all of your data from and information records for the current year, to prepare it to enter into the UN system. In step number 4, we enter the initial setup information into the UN software. Okay, so now we're essentially just getting into the software. And there's a reminder note. If you have been practicing in the software in training mode, which we talked about in class, the client training class, be sure to exit. Remember that information entered in the training mode does not transfer to the official UN software. So that's a good reminder. So basically what we're going to do is take all the information that we gathered in our worksheets, and we're going to enter it into the UN system. So on these pages in step 4, it gives you the steps of acts, kind of an overview of where to do that in UAN, and some additional, occasionally some reminder notes and some additional notes in the text here. So this is where it's just a guide as a reminder to all of the training that you've had so far. So again, for general maintenance entity setup, worksheet number 1, we have that's the simplest one. We have your entity information. You would go to general maintenance, entity setup, system, and entity information, and enter in the information from your worksheet. Okay, so you can read over that information. Step number 2, add the primary checking account. So use conversion worksheet number 2 for that. So you've got your checking account information. And note that secondary checking accounts and their cash balances will be added in step 4 of this the series of steps. There's a note that a starting warrant number must be entered for the primary checking account before printing warrants, and then click the change button. So if you recall, when we added our primary checking account initially, I won't be able to show you this, but we had to add the starting warrant number. Actually, I can show you this under Edit. You can change that starting warrant number here. Now, it's got a note about click the change button next to the start warrant number field in the system message. Those using the detail conversion method enter the first warrant number prepared on January 1st of the year. Those using the lump sum transaction method leave the starting warrant number blank and return to this step, at least the starting warrant number portion, after lump sum conversion is complete. So it's a little different for the lump sum conversion. So you can read that over. But basically, you'll for the first live transaction, that's when you'll enter in the primary checking number when you're using the lump sum method, etc. Okay. Then after each of these steps, going forward, you want to verify with reports. So you'll see this a lot. So you go to checking account reports, and we tell you exactly what a good report to confirm that you entered everything okay. So from 2 on, you're going to be seeing this kind of repeated over and over again. And they enter the information on the conversion worksheet. And here's a reminder about the calculation. Already seen this information, some of this information before, some duplication here. And then print a report to verify that everything's correct. Compare it. If it's not correct, then go back and fix it in the UN system, or check your manual records and see if maybe you calculated, if everything's accurate there as well. If you need to make a correction, make corrections, and then print your reports again to confirm. There's a little note about correcting beginning fund balances. We talked about this in class a bit. Once you have any activity in any fund, you can no longer establish the fund balances. So in the fund maintenance section, as you see, if we look at funds maintenance, or accounting maintenance funds, and we click on a new fund for our entity, gasoline tax, you can see there's no place to enter a starting balance. If I go to one of my existing funds, I can't establish the cash balance after I have any activity. So if you don't get this right initially, you have to understand that you'll have to use the fund balance adjustment utility to fix it later. So you kind of want to try to avoid doing that, and by preparing the data entry sheets, the worksheets ahead of time, that'll help you to avoid that problem. All right, next is worksheet number 4, investments. So same idea. Actually, next on our list is secondary checking accounts. So you'd use worksheet number 2 for this again. And here's where you establish your secondary checking account balance. So you fill out the form, you know what your January 1st secondary checking account balance is, if you have any. If not, make sure you skip this step and skip to number 5. So we won't go through all this detail, but you get the idea. You're basically using the worksheets to input the data and use this checklist as a guide. So number 5, then we'll establish our investment balances, if we have any. There are investments and their cash balances. And we use worksheet number 4 for all the investment information. So that's how steps 3 and 4 correspond. You gather it all, and then you input it into the system using this guide, and then you verify reports and make corrections if you need to. Vendors, payees, same idea. Use the worksheet, verify with the vendor payee reports, and then make edits as necessary. Cost centers, if any, you'll have to set those up first, step number 7. Revenue accounts, you'll enter in the revenue accounts under accounting maintenance revenue accounts. You'll add them based on your revenue account worksheets. And number 8 is appropriation account worksheet if you use the summary method. You enter your revenue accounts first. Verify that the revenue accounts look good. It's worksheet number 7. Enter your appropriation accounts. Confirm that the appropriation accounts were, everything was entered correctly. And then enter your budget amounts. These are all still working using worksheet number 7 and number 8. So first, you're going to enter, in those steps, you'll enter in the account information, and then you'll come back and do the budget information for both revenue and appropriations. So for revenue budgets, gives you the steps to access. Here we're using the conversion. Notice it says the summary budget conversion method. assumes that. If not, refer to the back of the book. You need to use the other method. Appropriation budgets. You got the calculation again for appropriation budgets. And then confirming the total for each fund. And fix any problems that you find them. So if you're not, notice these are both the summary budget method. So in this step, we use the summary method. If you're going to use the mid-year conversion or the detail, then you're going to look at the back of the book in the notes under the conversion worksheet sections. So that should go relatively fast if you've prepared all of this ahead of time and you've got your budgets already laid out. Just a matter of doing the data entry without having to gather it and figure it out all at the same time while you're in front of the computer. You've got it all laid out. Okay, so that brings us to step number 5, perform the transactions conversion. And remember, we've got 4 different options here. The first is the detailed transaction method. So we already mentioned that using the detail method, you enter all the entities, these transactions, in the order they occurred from January to the present day. Start with the first transaction of the year and backdate every transaction to the actual date it occurred and was recorded in your manual records. Please read all of the instructions. So you get your source documents together for this. You should already have these laid out. If you chose your method already, you should have the information laid out in order, your receipts, payments, purchase orders, in a daily order. Backdate the transactions 1 day at a time. So enter all transactions that have occurred each day since January 1st of this year. For example, backdate and post all transactions that occurred January 1st before posting transactions that occurred January 5th, or before posting transactions that occurred January 6th. Our recommendation, print and review reports applicable to those transactions posted for each particular day before entering the data for the following day of transactions. And for each day of transactions, post each day of transactions in the following order. Before posting any type of payment for the day, post all other types of transactions. In other words, receipts, cash transfers, cash advances, checking, investment transfers, purchase orders, all should be posted before you post payments. Review the purchase order and payment information below. Okay, and the reason you want to do this is because you're doing this daily. It's possible that, for instance, you had a receipt that on that day, say it's January 5th, you had your fund balance for a particular fund was $10,000. You got a receipt for $20,000, and you made a payment for $12,000 that day. Well, if you don't do it in the correct order, so your cash balance at the beginning of the year was, or that day, I guess, the fund balance was $10,000, and you record a payment without recording the receipt first, payment for $11,000, you've got insufficient funds for that payment because you only have $10,000 cash on hand. So you want to get the revenue, the cash increases, recorded first, and then record the payments, the outflows. So that's the principle we're trying to emphasize there, so you don't get yourself in a cash flow crunch there. Now that's only when you're doing the detail method as of that day. So January 5th, enter the receipt. If you didn't have any receipts, then just record the payment. And you got a receipt on January 7th, the next day of transactions, then backdate to January 7th, enter that receipt, and maybe no payment. So you may not have all these transactions every day. It corresponds to the real life when they were actually recorded in your manual records. You want the detailed method to record that way. And remember, for the conversion, you can backdate all of your transactions up until the point where you go live. So backdate to the actual days that they occurred on your manual records. You can, this again will be kind of obvious that you're converting this year because you'll have so many backdated records. You can always put a note under the purpose noting this was for conversion as well, so that it stands out even more. So let's get back to our book. All right, so here's a note. Before posting any type of payment for a day, post all of the types of the transactions first. Okay, I already mentioned that. What am I missing here? Oh, review the purchase order and payment instructions below. So we're getting to our payments. All right, the current year purchase order and blanket certificates created during the period covered by the UAN conversion should be posted and printed as the exact duplicate, duplicate using the UAN software. The original POBC should be stapled or printed to the back, printed to the UAN POBC for audit purposes. So in other words, your current year blankets and purchase orders that you wrote up on some official document, let's say you're converting as of August 31st and starting September 1st, going live. So you got all those months. Let's say in February you open up a purchase order. Okay. Well, if you're doing the detailed method, you would record in the UAN in February that purchase order when it was issued and print it. It's going to print a copy of the purchase order. That becomes sort of your official copy. You'll want to close the original BC, so however you do that in the other software or in on your manual records, write close on it, and staple it to the back of the UEN POBC, and that essentially replaces in the UAN system your POBC. Obviously, you did get it it officially done earlier, and you've got that stapled so you have the backup record of the original. All right, a prior year purchase order and blanket certificates that were carried over to the current year. So in other words, those purchase orders that weren't closed from the prior year, so still have an open unspent balance, carried over from the current year, need to be added in the UAN as a current year POBC in the amount of the unspent balance as of January 1st of the current year. The original POBC should be stapled to the back of the one for audit, the new one in the UAN for audit purposes. So in other words, you want to make up a new one in UAN just for the unspent balance. It would make sense to create because remember we said your appropriations, you're going to add your carryover amounts to your appropriations. And so you also, for your encumbrances, your purchase orders, you want to open those in UAN so that, because remember you need a purchase order to make payments on most of your account codes. Okay, here's a reminder about the different types of payments. For the detailed conversion, do not add any warrant payments during the conversion period, any warrants, printed warrants, because this will result in duplicate warrants. Instead, use the manual type. That's the one that does not print a warrant, it just records the number. Use the manual type of payment for all payments that require a warrant. This applies to all expenditures that require a warrant and to including investment transfers that require a warrant. Well, expenditures and investment transfers that require a warrant. Make sure to post manual payments in the exact numeric order that they were recorded in the UAN account warrants. So you add manual payments for all payments that require warrants, kind of redundant there. The manual warrant option is located right here. So if we go to our software, we go to Payments, Add. For the detailed method, you select the manual option. until you go live. You're going to record all these as manual warrants. And remember, you've got to key in the warrant number. So that's why the detail method, what you'll do when you go to the checking account, so here you can see you type in the warrant number. So when you establish your checking account, it's kind of jumping back to earlier, when you establish that checking account number under the detail method, you'll pick the first warrant that you wrote as of the current year. So if that was January, let's say it's January 5th was your current warrant, you would establish this warrant number as that warrant number that was recorded on your manual worksheet, the check number that you wrote at the beginning of the year. And then when you posted your payments that involved the warrant, say if it went all the way through August, you're converting September, all those payments would be manual, and unless they were truly electronic payments. But then that didn't involve a warrant, maybe an online payment or something like that. You'd use electronic for those. But if it involved a warrant, you would not use the warrant option because that would print another warrant. You would use the manual option. You have to be very careful to keep the warrants in the sequence, the same sequence as your manual books. Same idea with investment transfers that require, that's less rare, but if they required a warrant, you would also make sure it stays in sequence and use the manual warrant option. And then you also record, as I mentioned, electronic payments. So those are payments that did not require a warrant. You record all of those in the system. And then I think this one, option 2, is the, what was this? This was the month. Oh, this is the detail. Okay. So this is the detail. So you record the bank reconciliations as you go. So if you're converting as of September 1st, then you do 8 bank reconciliations all the way to August 31st, and print all your monthly reports if needed. So you're just going step by step, day by day with the detail method. So that's the detail method. The lump sum year to date, as I described below, it's entering the transactions in one lump sum amount. So in my example, again, if we start live September 1st, then we'll record a lump sum for each account code for the entire 8 months, or whatever period it is. So you can read over that information about the impact on audit. We've already kind of discussed that. But to do this, well, you gather all your information, as you already should have, and put it in order. And then you're going to add a vendor payee named conversion. So you can do that now. It's just a fake vendor payee that you're going to use for these lump sum conversions. So you just go to accounting, maintenance. I'm sorry, you go to general, maintenance, vendor payees, add, probably can put it in caps, just call it conversion. And you could put in a more detailed description if you want. But we're going to add this and use this for all payments. You don't need a location, you just save it. So it'll show up in my payments, my receipts. Yeah, and you actually, so make sure when you add that conversion, I didn't really mention that, but you make sure you select available in purchases and payments and accounting receipts. And then going back to the book, you post one giant receipt for each account code, revenue account code, for the entire. Now you could include all the account codes in one giant receipt, or one receipt for each revenue account code. But that's, remember, your worksheets where you put them together and you kind of like totaled up in your own worksheets or ledgers. You total up the total amount charged for the entire conversion, in our example 8 months, and you total up that amount for the revenue code, and you post a year-to-date receipt for those revenue codes, or number receipts for each individual revenue code, for all the revenue received as of the end of the conversion period. Same thing for miscellaneous transactions. If there was an interfund transfer, advance, you can consolidate these. So if you had an investment transfer that at $10,000 in January went to one from Fund A to Fund B, and then it was paid back in February from $10,000 exact amount from B to A. Well, you don't have to wouldn't have to necessarily record that, but you could record the net amount of that. So let's say if it was 10,000, the first initial advance was 10,000, and as of to date you've only paid back 9,000. Well, you record an initial advance of 1,000 and leave it at that. So when you're starting off in September, you still have $1,000 to pay back. That's one way to do it. Again, it's not going to have the detail. You have to back it up with your manual records, just like with that everything else in lump sum. But you can do it either record all the details. So these are the less common things. Let's get to the purchase orders and payments. For the lump sum method, when you do record the lump sum payments, first you're going to have to set up the purchase orders for those that require a purchase order for the payment, and you'll use the conversion vendor. So you go to Transactions, Purchase Orders, and again you can do this as one account code or all account codes in one giant purchase order, or several in blanket certificates. You pick your conversion vendor, obviously fake vendor. You could just pick the date of the end of the conversion, and then you list out, let's say it's for that by account code, each account code. So charges for payments through say POs open through whatever description you want to put in here for payments through conversion period, or through my example 8/31. And maybe for this particular account code it's 10,000. Obviously probably won't be rounded that way. And you pick your account code. Don't think I have the appropriations for that. Or you could lump sum for the entire year, just add, and in one giant purchase order. So keep adding these. Maybe this would be 70,000. And just do that and post that receipt or post that purchase order. Once you post the purchase order, that's what you'll use in your for your payments. You go to payments. In this method, you use electronic for your lump sum payments. So you're not going to record any warrant numbers for the for the lump sum methods. So you would post a electronic payment and use the conversion vendor for that. Use the purchase orders, those that require it, with the conversion vendor that's been built into those. And you may post either one large electronic payment or several that include one or more appropriation codes. So you can break it down, but either way it's getting all your appropriation codes charged as of year to date, okay, in one big lump sum. Important, before entering these transactions, read the Bank Reconciliation Other Adjusting Factors tab. Instructions below, your decision there will affect the amounts you enter for lump sum payments. Okay, so let's read through that. A single bank reconciliation should be posted that covers the entire conversion period when you do the lump sum year to date. Ideally, the conversion period covered should end on the last day of the month so the live transactions can post starting the beginning of the next month. The as of date of the bank reconciliation should be the last day of the month before the live transactions. the bank statement tab, enter in all of your ending balances for all of the accounts from the corresponding bank statements ending balances. So investments, etc., primary checking account. Clear all the conversion transactions. Clear, and then under the Other Adjusting Factors tab, you want to ask the question, are there any outstanding payments that have not processed at the bank as of the month ending on the bank statement? If yes, enter the pre-conversion payments line in the Other Adjusting Factors tab and use the Notes section beside it to document all the actual warrant numbers and or electronic vouchers that are outstanding. And then here's an alternative to using the pre-conversion payment option. Just for those outstanding payments, you could essentially record them as detailed. So it said you could enter in a separate electronic payment for each outstanding payment. And for example, if you have 10 warrants and 1 electronic payment that are outstanding as the last statement date before live transactions, then enter all of them as separate electronic payments in UAN. Make sure you don't include the amounts charged on these payments in the lump sum conversion payment. Okay, so you've got to decide if you want to use this alternative method or just use it this way. Use the other adjusting factor for those outstanding payments before you enter in all of these electronic payments. Otherwise, you're going to have to correct them if you choose the alternative. So you can read over that. If you have any questions, please give UAN support a call. We can explain it in more detail. The month-to-date lump sum method, like I said, is identical, except you break it down by month. So really, read the above, basically backdate. So in other words, you're entering lump sums just for the month in each of the account codes for both revenue and for appropriations, or your purchase orders and your payments. And then you reconcile each month as you go. The mid-year conversion. Well, we finally got here. This is the last conversion method, transaction conversion method. And as I mentioned before, excuse me, I had to pause to clear my throat. Still a little bit sick. Option 4, this lays out the mid-year conversion. We already gone over the pros and cons of this already. I think I mentioned that all pre-conversion payments that are standing on a subsequent bank reconciliations must be tracked separately until they clear the bank. So that's one of the disadvantages, you could say, of the mid-year conversion. If you choose this method, here's the advantages and disadvantages, and this is how it's kind of a summary, because some of this information, this mid-year conversion steps, is covered in more detail in your step number 3 and 4, but you have to kind of disregard some aspects of that step 3 and 4. So really, number 1, you complete step 3, organize all of your information and data preparation checklist 1 through 8. Make sure you read through those again and check the points where it says, look for the underlined sections where it says for the mid-year conversion, and make sure that you prepare it appropriately, each of those sections appropriately based on those instructions. All right, so you prepare the data, you enter your entity setup information, nothing new there, add your primary checking account, add all funds and enter the beginning fund balance as of the first of the year, just like the other methods. Enter the non-expendable balance where applicable. Okay, so we're still kind of a lot of the same thing. Add vendors and frequent receipts sources for vendors. Cost centers, revenue accounts, appropriation accounts, nothing new there. Add revenue budget amounts. Well, this part's different. You calculate your revenue budget for each revenue account code in a different manner here. The revenue budget for the entire year So you take that dollar amount for each revenue amount, account code, minus the actual revenue collected through the end of the last month equals the budget for the remaining of the year. So basically, if you're starting in September this year, going live in September, you're going to budget just for September, October, November, and December, those last 4 months. That'll be your budget in UAN because it's mid-year. So you're going to extract out the amount that you've spent or collected in revenues for the entire year. Extract that out from your budget, your entire year budget, so that you only have a partial year budget in UAN when you entered it. Under the appropriation budget, the same idea. You calculate your appropriations for each expenditure account this way. Appropriations for the entire year minus the actual spent through the end of the last month before you go live. So you subtract that out and you get the appropriations for the remainder of the year. So again, mid-year, you're starting September 1st live, then you subtract out those 8 months of expenditures and you just start off with a budget for September through December. That's all you have in the UAN system. Now remember, you established the cash balance as of January 1st in all the funds. But now, to get ready for that September 1st, or whatever the date is, so then we start to go live, you add the fund balance adjustments to change the fund balance and to your manual balances that are on your, like say, your cash journal, as of the last day of the previous month before going live. So in my example, August 31st, what was the fund cash balance for each fund? You go to your, instead of recording any of those transactions, then you don't record any payments, purchase orders, any of that stuff. You just go to Utilities, Fund Balance Adjustments. You started off with some money at the beginning of the year. You had all kinds of transactions in that fund. But you just go here and you click on Add and record a fund balance adjustment for each of your funds to get it to the point, the last day of the month before you convert. So you really want to start, go live on the first of the following month. All right, then after doing that, then you add secondary checking accounts, if you have any, and post the checking transfers to establish the cash balance of the secondary checking accounts as of the conversion date, the first day of the current month. You're going live. Same thing for investments, as of the conversion date, first day of the current month, you're going live. Then you open up purchase orders or blanket certificates for carryover activity, commitments made prior to your conversion date, whether those are prior year or just prior to the conversion date, you know, the first months where you're just plugging this number. So my example, January through August. What are the carryover purchase amounts just for that activity as of that date? Add primary checking account starting warrant number. So for this, you start September 1st, let's say, then you put in the first warrant number for the first transaction of that month, whatever well, if it's September 14th, then it's the first transaction there. You modify your checking for that month to that number. All right, post all transactions that have already occurred in the current month. Okay, so maybe, so you're doing all of this as of September 1st, but maybe you don't get to, you still have some manual records for the first couple weeks. Then you would post all those transactions in the current month as normally that have already occurred, and if it requires a manual warrant, then you would record a manual warrant. If it's electronic payment, electronic, etc. I failed to mention, like with that checking accounts, return to that. So for the mid-year, again, the first check that was cut in the conversion month, the date after the conversion month, conversion ends. So the first month that you're going live, you would change the warrant number to that warrant number used. Okay, and then so get your transactions up to date, and then begin number 17, live transactions. All right, a little note here. When you do your first bank reconciliation at the end of the month, enter all of the outstanding checks from the end of the prior month in the pre-conversion payments line on the Other Adjusting Factors tab. Continue doing this in future bank reconciliations until all pre-conversion checks have cleared the bank. So that, again, is here under Transactions Bank Reconciliation. If I pick a month, or I'm just going to get in here so you can see it. We're talking about this right here, the pre-conversion payments. Total of outstanding payments used prior to joining UEN. So you would use that for those outstanding checks. And you'd have to keep track of that and use that adjusting factor until all is done, until all clear, however long it takes. All right, step 6, begin using the UAN software. Congratulations. And here's some notes about that, the support line hours, etc. If you've not had an on-site visiting clerk, and you qualify for that option paid by UAN for 8 hours on site, then call our support line and we will arrange that for you. That's what you qualify for. There's a note about mid-year and reminder about mid-year and month to date. You can read that over. Then I kept mentioning the appendix at the back. There's the detailed budget conversion. If you have any interest in that, you can read over that information on your own. And give us a call if you have any questions. Well, that is it for the conversion. I know it was a long road in getting there through the lessons. And like I said, after reviewing all that information, if you have any other questions, please give the UAN support line a call. Or your visiting clerk, even better, actually, will probably refer you to, if you have a whole laundry list of questions, to make a list for those questions and use your visiting clerk time efficiently.